So let's begin the show, and today we are going to talk about a consumption theme. And we all know that consumption as a theme does really well in expanding economies, and especially when incomes are rising and inflation is relatively low. A relatively low interest rate regime can also, provide a fillip to the consumption theory. But then talking about India, the consumption story is really picking up steam. We are seeing early signs of rural recovery. Also, the kind of data that's out also says that between Jan and March, quarter volume growth in rural regions was higher than in urban areas for the first time in 5 quarters. Talking about some numbers, rural demand grew 7.6% year on year compared to 5.7% in urban areas. Now, even the RBI has acknowledged this as an indicator of rural recovery in recent reports. Now, the question is, should investors consider consumption theme-based funds in their portfolio? If you're looking at a sector diversification, you're looking at a proper strategy where you want to diversify for maybe 5 to 7 years, should consumption be that theme? Let's talk about this more in depth with Amar Kalkundrikar, fund manager, equity investments, Nippon India Mutual Fund. Amar, good evening and welcome to the show. So, before I get into the nitty-gritties of your fund, which is Nippon India Consumption Fund, let us just talk about this entire theme, which is clearly picking up, as the data also says. Now, mass consumption clearly, Amar, was really subdued post-COVID, and the way we saw the effects lingering around the economy, etc. But now it's not only that the government, the new government that has taken shape, but also the kind of signals we are getting from them. If we talk about budget or we talk about 100-day agenda, a lot of thrust, it seems, will be going towards the consumption theme, towards rural economy. How do you look at it? How do you analyze it? The new shape of the government and their more thrust on, churning out consumption or bringing it back to where it was.
Sure. Thank you. Thank you, Kavita. Thank you for having me on your show. If you see the consumption space, last 2 3 years have been challenging on the mass consumption side, but we have begun to see, some sort of green shoots. Some of the QSR companies have shown improvement in, their SSSG or LFL growth trends from quarter 3 to quarter 4, as well as in the current quarter. Some FMCG companies have called out for, green shoots. The Nielsen data that you quoted, wherein rural volume growths were better than urban volume growth in a reasonably long period of time. These are all indicators of growth having bottomed out. If you see the GDP consumption data, that personal consumption grew barely 4% last year, which is probably sort of a decadal low or a multi-decadal low. So I think the base now is quite favorable. We are beginning to see some green shoots. It is not yet a what should I say, entrenched recovery. Therefore, you're not seeing it across companies, you're not seeing it across categories, but already some lead indicators are there. Two-wheeler sales have been fairly robust starting last year's Diwali. Some of the durables have seen fairly strong seasons, summer seasons. So overall, we are optimistic about mass consumption recovering going forward. Now, on your question of government, let's wait for the budget to come and see what it is in it. But we think even without, counting any particular support for consumption in the budget, the outlook is reasonably optimistic going forward. Next 2 3 years for mass consumption, we expect to be better than what it has been over the last 2 3 years.
Exactly. But then as a theme, Amar, if we have to talk about it or, go much deeper, it's a very broad-based theme. I want you to help our viewers understand that when we talk about consumption, what exactly are the areas that we are talking about?
Sure. Excellent question. So essentially, the way we at Nippon look at consumption thematic is this is about investing into companies that provide branded goods and services to consumers. So it is a play on rising incomes, aspirations, and brand consciousness of Indian consumers. When you see the behavior of consumers, as their incomes rise, it is across categories that they are interested in premiumizing their experiences, going for branded products, and are willing to pay for it. That is the sort of behavior that we want to capture in our portfolios. On your question of the width of the sector, that's actually the beauty of it. You see, it's a fairly heterogeneous sectors while remaining sort of true to level consumption product. We feel there are almost 6 7 different sub segments within consumption space. They are all catering to either different income segments, different stages of evolution of category, which allow you to diversify well in the portfolio and also be opportunistic in taking exposure to different sub segments. So if you see, let's say our consumption product or consumption portfolio, we have exposure to FMCG, alcoholic, that includes alcoholic beverages and tobacco, as well as automobiles, different types of retailers, retail healthcare services, online, some of these online companies that got listed in last couple of years. This is the width or gamut of investment universe available before us. And the common theme is these are all branded goods and services that consumers are either consuming today or want to consume. So in a way, this is a heterogeneous thematic which allows for that opportunity picking between and managing between different subsegments as well as diversification.
Amar, looking at India, its demographics really provide for a long-term opportunity as far as consumption theme is concerned. Now, looking at this theme catching up and all the triggers and all the factors that you just also counted in, are you also ready to diversify beyond the themes that you already have under consumption? Are you also looking at adding something new?
Such as?
Anything beyond what you already
Okay,
have in your
so look,
portfolio,
the way
in
we
terms of weightage or in terms of new addition, in terms of weightage, exposure, or in addition?
Sure. So the way we look at the addressable universe for this theme is if you see of India GDP, roughly 60% is private consumption. That includes all kinds of things, and not everything is of interest for us. We look for categories with couple of funnels. One is it has to be a category which sells on the basis of brand consumer involvement has to be relevant. And secondly, the brands that we are choosing or the companies that we are choosing should be leading brands with pricing power and growth outlook. This is at the very top down level, the funnel that we, or let's say screening criteria that we apply. When you use this screening criteria, a large number of subsegments sort of open up. That is, people sometimes mistake consumption to be equal to just FMCG. And that probably was the case maybe 10 15 years back. But in the last 10 15 years, a lot of businesses have come of age. A lot of new listings have happened. Private equity, has sort of accelerated some of the businesses and then listed them in the stock markets. So today it's possible to create a diversified portfolio that has exposure to staples, which is your basic FMCG, various kinds of retailers, be it apparel, footwear, jewelry, grocery, electronics, so on and so forth. Then automobile company, lifestyle producers, be it footwear or apparel. Then even retail healthcare services such as hospitals, diagnostic chains. Some of the retail financial products also can fall under this umbrella. All the B2C or online aggregators and sort of platforms also are part of universe. See, when we run our product, we are very clear about a couple of things. We will remain a true to label consumption portfolio. Therefore, the universe that I mentioned or anything else that gets added on the basis of criteria that I mentioned is what we will look at. Businesses which have a sizable or let's say a decent B2B element, we are not interested. I mean, that is not a core part of this thematic. That we will not have that in the core segment. As you know, for thematic products, you have a leeway to invest up to 20% outside of core thematic. Some of these things can fall there, but we will use, if at all, that window very sparingly.
No, rightly pointed out by you. Over the past few years, we've also seen a lot of high growth businesses being listed under this category also, which offer a lot of variety to a fund manager and also for an investor if at all they want to be interested to invest in this category. Now, looking at the entire basket of consumption theme portfolio or the kind of funds available, there are 21, 22 odd funds. Talking about your fund and the kind of mix you have, if you could just give us a return trajectory. I mean, return obviously should not be the reason why you should be opting this particular category or a fund in your portfolio. You need to have a strategy attached to it. But then having said that, investors often look at returns. So Talking about your return trajectory, 5 years, 3 years, in past 1 year, how has it been? And it's one of the best performing funds in the category as well. How would you like to explain this to our viewers?
Sure. So, return over last 5 years or have been reasonable, but as is sort of um, it's important to say that past return is always, is not the indicator of future returns. Data about returns is available. More than the returns data, I would like to, dwell a little bit more on our investment philosophy or the way we look at portfolio construction and stock selection. So, our endeavor is to find leading businesses with pricing power and growth outlook. Generally, these happen to be leadership businesses in individual categories. Our view is profit shares tend to be far more consolidated than sales shares, which is why our emphasis on buying leadership businesses. We are okay to, we are open to buying businesses which are not leadership at times when there is either significant sort of cyclical upturn or valuations are in deep stress. But otherwise, generally, we prefer leading businesses that have double-digit kind of growth outlook, that are building on pricing power, if not necessarily exercising it at the same time, and that are sort of either on path or already delivering double-digit return profile. Um, when it comes to constructing portfolio, so for stock selection, we are market cap agnostic. What we look for is size of the prize, which is essentially what is going to be the opportunity in the long run, and what is our right to win. That is, as a company or as a brand, how well prepared are you to gain market share and to sort of find your rightful place. So those are the two criteria that we look at, not so much the market cap as a starting point in selection. But when it comes to creating a portfolio, there we are conscious of what kind of allocation is there between large, mid, small cap, because one has to strike a balance between resilience and growth attributes of the portfolio. So if you see in the calendar year, so first of all, we follow a sort of flexi cap approach. If you see calendar year 21-22, when we were going through a significant sort of consumption uptick on the basis of opening up, we had mid caps and large caps in a significant proportion in the portfolio. Large caps at that time were about 40 to 45% of the portfolio. But sometime in 2023, as sort of share prices started reflecting, share prices were rising and underlying risk rewards were getting altered with that, we pivoted portfolio significantly to a large cap orientation. So right now, large cap would be about 65% of the portfolio. This, of course, will change again from time to time, but this is what it stands at the moment. And in terms of sectoral composition, if you see, what we have done is because we believe mass consumption is where weakness has been most in the last 2-3 years. We have increased exposures to sectors where mass consumption revival should benefit. That includes your basic FMCG, QSR, automobiles, where we have seen recovery already starting. And of course, some of these home improvement categories. This is probably two-thirds of our portfolio, maybe three-fourths of our portfolio. This is where we think opportunity is from a short to medium term point of view.
All right, Amar, one last question on risk. Now, risk is attached to every investment instrument. Talking about having exposure in a thematic fund, it usually carries much more risk than a diversified fund. How would you like to explain this to our viewers? Too much of concentration in one particular theme or sector can actually take away all the returns or the kind of diversification motive that they might have in their portfolio. So, how can you smartly place any sort of thematic fund in your portfolio so that you have that benefit of diversification and also the risk reward remains good for them?
Sure, great question again. So the importance of diversification cannot be understated. You're absolutely right. Having said that, I think this fund needs to be looked at a little differently and not through the narrow lenses of a sectoral fund or let's say a narrow thematic. First of all, consumption is a fairly wide secular growing basket and it is reasonably heterogeneous. So within consumption universe itself, you have scope to diversify in a meaningful manner. And if you see our portfolio, for that matter, thematic portfolios or consumption portfolios, other consumption portfolios in the market, you would see that from time to time composition has changed while remaining. In our case, we have remained true to label consumption, but composition has changed. I don't think the diversification, a lack of diversification, is a challenge in case of consumption companies. One has to, of course, bear in mind one another thing, which is because this sector is seen to be less cyclical, less capital intensive, less prone to regulatory interference, and in general high on a perceived secular growth. Multiples in this sector generally tend to be higher than rest of the market. Now, how expensive versus broader market, that has varied from time to time. Peak probably was in 2019, but since then, particularly at the sort of after almost three and a half years of post-COVID rally, what we find is that the relative multiples of consumption space to broader market are meaningfully lower. The relative premium, a large number of sectors have seen multiple re-ratings over last 2-3 years. On the other hand, consumption multiples have been either stable or in some cases modestly corrected. Therefore, the premium that consumption space for the quality of cash flows and resilience that it offers, I think, is reasonably commensurate. And especially with the revival in growth that we estimate, I think valuation as such is also not a big concern at this stage for us.
All right, Amar, thank you so much for being on the show today and explaining not only the consumption theme to our viewers, but also how to place this particular theme in their portfolio. Thank you so much for being on the show today. Thank you. On that note, let's take a quick break, but then post that, we'll be answering your mutual fund portfolio queries with Hemant Ustagi after this break.